Welcome to the Capital News. Today is July 31st, 2019. Thank you so much for joining me. So the main topic for today's podcast is going to be centered around the Federal Reserve because they did it, folks. They cut interest rates by 25 basis points as was expected by the markets, as was expected here at the Capital News. But the other thing that we were warning about and cautioning about and saying what you really had to pay attention to with this statement, with this move from the Federal Reserve, was how did they handle quantitative tightening? That was, to me, the key point in all of this. What did they say? What did they do? Well, they're ending quantitative tightening 2 months earlier than originally projected, because we have been told for quite some while now that quantitative tightening would end at the end of September. And we had a couple of podcasts on this over the past couple of weeks describing the research that was conducted by the Federal Reserve itself, some economists within the Federal Reserve system, saying, you know what, guys, it's one thing to control interest rates. It's another thing to do this quantitative tightening, which may, in fact, have the same effect as increasing interest rates. And so I said that's why we have to pay attention, not just to the interest rate decision, but to the decision or non-decision relating to quantitative tightening. And I said this was important because this was going to be a signal as to whether or not the Federal Reserve sincerely believes that that research by a couple of the Federal Reserve's own economists was true or not. Do they believe it? I guess it doesn't matter if it's true or not, but do they believe it to be true? That's ultimately the point. And evidently they do. There was one journalist at the press conference this afternoon that did ask Chairman Jerome Powell the question about quantitative tightening, and he dismissed it. He said, we're just ending it early, and that was pretty much it. End of story. So that tells me something. It tells me one of two things. It tells me, one, they either genuinely just dismiss it and don't believe it, or they actually do. And as I just said previously, I do believe that the Federal Reserve believes that interest rates are actually higher than what they claim. Why? Because you've also had quantitative tightening taking place. And we said, what type of net effect will transpire following the Federal Reserve's decision? Because if they had cut interest rates by 25 basis points, but continued to also allow for quantitative tightening to exist and persist for the next couple of months, then net, what's the ultimate effect? Is it a wash? Is it neutral? Do they cancel each other out? Or does a 25 basis point cut actually net out to a 15 basis point cut or a 10 basis point cut? So you're not getting the full dose of the 25 basis points. Well, evidently they believe that to be the case. That's my interpretation. Jerome Powell, he dismisses it. So it's either they don't believe it or they do believe it, and they don't want to send that message out to the market that, we're doing it because while we might tell you that interest rates are at 2.25%, 2.5%, they're really at 3.25%, 3.5%. You can't send that signal out because then you have markets in an uproar. Because how many people are reading reports from the Federal Reserve? Not too many. Not too many. But that's what I do. I'm sick in the head, but that's what I do. So I'm relaying that information to you. And I think that's ultimately why the Federal Reserve ended quantitative tightening, because they were concerned that the net effect would have been a wash. It would have been neutral, or definitely would have been diminished if they had not ended it at this time. 25 basis points, folks, isn't going to do a thing. It's not going to do a thing. This has all been signaling. We've had a stock market rally on the major indices 20 to 25%. The vast majority of this has been on the back of the expectation that the Federal Reserve was going to cut interest rates from 7 months ago, because it was wait and see. We're going to stop hiking, and now we're going to do wait and see mode, with the anticipation of the addicts on Wall Street that they were going to eventually cut. Well, they've cut, and we've seen the markets sell off big today. Now, again, one day does not make a trend, but the S&P lost 33 points, representing a decline of 1%. The Dow lost 333 points, representing a loss of 1.2%. The Nasdaq lost 98, also a loss of 1.2%. And the Russell 2000, the small cap index, lost 11 points, down 0.7%. Dow Jones Transports was down 0.8%, and the New York Stock Exchange was down 0.9%. Very fitting and, again, very timely with our volatility model, folks. And I'm going to continue to bring this up on a near daily basis. Whether or not these stocks move plus 1%, negative 1%, plus or minus. This is what is going to take place for the remainder of the year, in my opinion, especially if the volatility model holds up. And I think it will. Because Wall Street got what they wanted to a degree. They got the 25 basis points, but then you have to listen to Jerome Powell give his press conference. And again, these people, they're terrible economists and they're terrible communicators. We have no idea what the Federal Reserve is thinking, how they're thinking, and why they're thinking what they're thinking. Because, it was wait and see, we're going to be data dependent, and then all of a sudden, well, there's uncertainties. There's a trade war going on, and, Europe slowing down, China's slowing down, the rest of the world slowing down. The U.S. is doing fantastic, but, it's the rest of the world that we're so concerned about, and, we're going to have to cut. And Chairman Powell did not make it sound like this was the beginning of more cuts to come. Now, we know better than that. This is definitely the first of a series of rate cuts to come. This is an easing cycle, ladies and gentlemen. Make no doubt about it. Do not be left in the dark thinking, well, you just said we're just going to cut this once. It's an insurance cut, which they actually said that. He said, well, this is an insurance cut, and we'll see what happens. We'll continue to be data dependent, whatever that means. And you had some of these good journalists, some of them actually asked some good questions, and you can't get a straight answer from these people. You have Chairman Powell come out, he says one thing, then you have all these other ones, they make their speeches, and one thinks this way, and the other thinks that way, and nobody knows what's going on. This is too much power within these organizations. That's why you got to end the Fed and abolish the federal income tax. We say it here every day because it needs to be done if you want to solve these problems. Because I got to tell you something, the 20 nuts that are up there on the stage, and we'll talk about that in a little bit later on, they don't have the solutions. They might be able to identify a lot of the problems, but they don't have the solutions. And Donald Trump, I tell you, folks, he's not living up to what I thought he was going to be when I voted for him. And a lot of people will say, well, see, we told you so. Well, let me tell you something. Hillary Clinton wouldn't have been any better. Okay? So I don't want to hear it. All right? My vote was cast because Donald Trump was talking about the Federal Reserve being a problem, causing bubbles, causing distortions. And now he's in there saying, yeah, well, I'm the president now, so continue, blowing those bubbles, continue with those distortions. I can't stand for that. I rail against him every day. So we don't have great choices, which is a true shame because we need some great choices right now with what our country is facing. So we'll continue talking about that, as that's what this podcast is all about. Oil moved around a little bit. We're at $57.80 per barrel for WTI. Brent is trading at $64.25 per barrel. Gold got hit a little bit today, now trading at $1,421 an ounce. It was up at $14.40 yesterday. Silver also got hit a little bit, trading at $16.19 an ounce. Uncle Sam's 10-year Treasury is now down a little bit further, yielding 2.02%, getting very, very close to 2%, and we imagine it will go lower. Again, there are some bank analysts out there, some market analysts projecting that the 10-year will hit 0. I will not be surprised if that actually does happen, because we are going to be in the midst of an easing cycle. We may even be in the midst of another round of quantitative easing sometime down the road, in the not too distant future, mind you. The VIX, the volatility index, gained 16%, yes, 16%, and is now trading at $16.12. So a lot took place today, obviously on the back of this decision from the Federal Reserve. The world was on pins and needles, waiting for what one person says. This is not free market capitalism. This is a rigged system. This is ridiculous. We don't sit on pins and needles waiting for one person to talk, especially somebody who doesn't know what they're talking about. That's what makes it really rich. But the addicts on Wall Street, I mean, you got a big sell-off. Again, one day does not make a trend, but we were telling you this could happen. Buy the rumor, sell the fact, sell the news. That seems to be what took place. We'll see what happens tomorrow and the remainder of this week. But really, we're going to have to see what takes place next week. And, just do markets calm down? Do they start to rally again? Is there a melt-up effect? Or do we just trade sideways for a little bit until people get their bearings? Anything can happen in this market. Anything. We are on razor's edge. You know this. We talk about these issues here every day. We have continuing economic numbers from the global economy that continue to deteriorate. Some of them are a little mixed. I mean, it's month to month, but you got to look at the trend. That's why you can't just look at anything in isolation. You got to look at them, see what type of trend is building. And most of them are down or with a downward bias. Hate to tell it to you, but that's just the way it is. And that's what we're here for at the Capital News. Tell it like it is. So we have Wall Street now a little perplexed with what the Federal Reserve is going to do. Because, of course, they were hoping that Chairman Powell was going to come out and say, you know what, this is the first cut of more to come. He didn't say that. He did say that the Federal Reserve stands ready to sustain this economic expansion, which is one of the longest in American history in the modern era. So we're at the end of a business cycle. We have things softening, economic variables, financial variables that are softening on a daily basis. I mean, this is just the reality of it, folks. Will the President of the United States come out and tell you the truth on this? No, not for a second. Will the Federal Reserve come out and tell you the truth on this? No, not for a second. Not for a second. Chairman Ben Bernanke, when he was the chairman, he said there was no problem in the subprime market. Then he said, if there is, we'll contain it. It'll be contained because it's so small. Oh, really? We just caused a global recession, but I guess you contained it. Good job. And then they go and they embark on zero interest rate policy, quantitative easing. Please check out our YouTube channel, The Capital News, or our website, thecapitalnews.com, and check out that video because we put that visual together when we're looking at the total assets, the balance sheet of a few central banks, the Federal Reserve, the European Central Bank, and the Bank of Japan. I want you to see what quantitative easing looks like. I want you to ask yourself a very simple question. Does this policy look sustainable? Because it's one thing to hear me talk about it. It's another thing to actually see what I'm talking about. It is not sustainable. And now you have central bankers who are trapped. They're trapped like the rats that they are because they embarked on a policy where they were shooting from the hip, which, by the way, was basically an admission by Chairman Powell today during his press conference because there were questions surrounding U.S.-China trade talks because the trade wars are causing a lot of this uncertainty. And when the Federal Reserve picks up the phone and they call a whole bunch of businesses, which is what they do, and they say, well, what's going on? What are you worried about? What are you optimistic about? China trade talks, front and center, or at least that's what they're telling us. And they say, well, you know what? That has a lot to do with it this time. And the Federal Reserve really doesn't have that much experience doing this, so we're sort of learning as we're going. Does that give you a lot of confidence? A bunch of people who already don't know what they're doing, now they're admitting openly that we've never done this before, so we don't know what's going to happen. Wow, what a stable, steady hand we have at the Federal Reserve. And I don't just blame this all on Chairman Powell. He just happens to be the guy right now. Because you had other central bankers. You had the other Federal Reserve chairman, Alan Greenspan, Janet Yellen. Oh, yeah, an insurance cutting interest rates is fine. Fantastic. Fantastic. Let's just keep this bubble going. Let's just keep this party going. There's no responsibility. Nothing. It's only your purchasing power, by the way. This is a race to the bottom. But there's a couple other things I want to talk to you about as well, because we have the conclusion already of the U.S.-China trade talks this week. I mean, what a waste of taxpayer dollars that was. Can you say rope-a-dope? Have we been saying that here for the past couple of weeks? This is rope-a-dope, folks. There's no question about it in my mind. We flew all the way to Shanghai. How much did that cost? The plane ride, the security detail, the food and alcohol bill, because you know they drink. I mean, for what? To go over there simply to reiterate, oh, yeah, well, China, yeah, we might agree to buy more agricultural products. We might. Very interesting, isn't it? That's what they said before for this whole thing to become a truce following the G20 meeting in Osaka, Japan. Well, we look at the data. We read you some articles. What happened? There's nothing. The Chinese aren't increasing anything. Now, is Donald Trump going to increase tariffs on them because they're not making good on their deal? I mean, he takes to Twitter all the time here recently. Mexico's doing good. Guatemala's helping us out now. But China doesn't want to make a deal. But then sometimes he said, oh, yeah, they do want to make a deal. But they never follow through on anything. Well, you're going to slap them with more tariffs. You're a tariff man, and you think tariffs are the best thing since sliced bread. So what's the hesitancy? Why wait? Do it. I mean, he's not going to. And if he does, watch the stock market sell off. Donald Trump boxed himself in because he wants to take ownership of this stock market. Now, if he had listened to us here at the Capital News, he never would have taken ownership of the stock market and the economy. I mean, you'd have to be a fool to do such a thing. Now, I don't know if this is the president's own doing or if he was advised to do such a thing. But he's got to change his thinking on this, although it might be too late. So China continues to play rope-a-dope. They're not, I mean, if they buy something, I don't know who they're going to, I mean, what are they going to do? They say, well, we might do it, and we're going to look, we'll look internally for the demand. You know where they're going? Exactly where we said they would go. They're going to Brazil, and they're going to Russia. Remember? Months ago, we were talking about those two countries. Wheat, soybeans, that's what we've been talking about here. This trade deal has nothing to do with trade. You think we're going to get out of the hole we're in if farmers start selling more soybeans to China? It ain't going to happen. You think President Bolsonaro of Brazil or President Putin of Russia is just going to roll over if China says, well, you know what? We made this new deal with you guys to start buying soybeans and wheat from you, but now we're going to start getting it from President Trump and company over there in the United States. You think they're just going to let that happen? I mean, I want our farmers to be successful. Don't make any, don't be hesitant on this. Don't doubt me. I want the United States to succeed. I want our industry to succeed. I want our farmers to succeed. But this is what happens when you play these games. This is what happens when you think tariffs are a fantastic solution. They're not. This is what happens when you go it alone. This is what happens because even if there is some sort of deal, will China trust this president? His credibility is in question. You have the USMCA, NAFTA 2.0. Then what happened after that? Donald Trump threatened tariffs on Mexico to get a handle on the border situation. How does China know that Donald Trump isn't going to come to the table, make an agreement, and say, well, I'm fed up, I'm sick of something else that you're doing, China. I'm going to slap more tariffs on you. You don't know. And the Chinese, you have to suspect from our perspective that the Chinese aren't going to follow through on what they say either. So now you have the conclusion of this meeting, which was a complete waste of time. Complete waste of time. It wasn't even a full day of talks. It was like a lunch. We flew across the world to have lunch. Ridiculous. And now we are not expected to have another in-person meeting, whether we go back over there to China or the Chinese come back here to Washington, D.C., at least until September. September. Rope-a-dope. That's what is being played here. And of course, in the meantime, what are we going to hear? Well, we might hear there are some fantastic phone calls taking place between the U.S. and China, and there might be some more beautiful letters being written. Time will tell, but I wouldn't be surprised if either one of those is what's told to us. Now, since we're bringing in billions and billions of dollars from all of these wonderful tariffs, the U.S. Treasury, of course, had to tell Congress you got to raise the debt ceiling. Of course, there's no fiscal conservative out there anymore. You know, where you guys at? Where are these fiscal conservatives who are so responsible with this? You're not there. Nobody to be seen. Maybe Rand Paul takes to Twitter, makes a statement. There's nobody who's responsible for this government anymore. It's a blank check. Max out the credit card. We're not paying for it. The American people are. Ha ha ha. What a joke. What a system. This is who we vote for. So now you have the U.S. Treasury having to use, and this is an article in Bloomberg, okay? The U.S. Treasury has been using extraordinary measures, extraordinary accounting measures to stay within the debt limit until this bill gets passed and signed by the president. Extraordinary accounting measures. What's that sound like to you? Fraud, maybe? Fixing the books? What do you think would happen to you if you're a business owner and you're getting audited by the state or the IRS and you say, if you think those numbers look a little funny, it's just extraordinary accounting measures. You don't have to worry about it. Uncle Sam does it, so you shouldn't come after me. Okay? I mean, this is such a PR BS, it's not even funny. We're using extraordinary. What does that mean? Are they using extraordinary powers? Are they siphoning money from somewhere else? Are they robbing from Peter to pay Paul? I mean, what are they doing? What does that mean? I would like to know the answer to that, wouldn't you? Because it's your money, it's my money, it's our money. This is a joke. There is nobody who is taking our finances serious at all. Donald Trump just wants the Federal Reserve to continue printing money. Let's just monetize everything, because that's a fantastic idea. That's not going to cause any downstream effects whatsoever. It's only the reason why we've been stagnating for the past decade. It's only why Europe has been stagnating for the past decade. It's only why you're going to see hard landings out of Asia, particularly in China. And again, that's the other thing that President Trump wants to talk about. He wants to say that China is suffering from their worst economy in 27 years, from a growth rate perspective on GDP, which is true. And of course, China has BS numbers too. I'm not here to defend China, make no mistake about it. But guess what? The president doesn't seem to understand or respect the interconnectedness and the complexities of the global economy. Because Europe is most definitely a zombie continent, basically, especially the Eurozone. And now with Brexit, that whole debacle that's going to transpire here over the next few months, that's just going to be more drama to add to the top of the pile. So you have no doubt that Europe is basically a zombie right now. And it's only going to get worse, folks. You know that China and Asia more broadly is slowing down as well. We know from the data that we talk about here on a daily basis that the United States is slowing down as well. So you have three of the world's largest economies, the U.S., European Union, and China, all slowing down. And somehow Donald Trump wants to make you believe that this is the greatest economy in U.S. history and that we're going to be perfectly okay, that there's nothing wrong with this, that there is no interconnectedness, that the financial markets are not interconnected, that supply chains are not interconnected. How stupid do you have to be to believe this? Because the president says it, because he tweets it. This is ridiculous. This is a huge disservice to the American people. Why? Because he's talking about the stock market all the time. Why can't he talk about the real economy? Why can't he tell you what's really going on? Are there some pockets in the United States that are doing well? Of course. Of course. That's typically the case. Even when you're in the depths of a recession, there's usually some industry somewhere that's doing well somewhere. But that's not what you look at. You got to look at everybody. And candidate Trump was talking about that stuff. Now you have farmers being bailed out. Once again, this is round 2 of the bailouts. The first bailout was about $8 billion. The second bailout that's coming is going to be $16 billion. So it's getting worse, not better. It's getting worse, not better. And you had an article out of the Wall Street Journal a few months ago highlighting this fact. And this was a few months ago. You had a few major farm regions in this country where you have bankruptcies of farmers at multi-year highs. This is not good, ladies and gentlemen. Not good at all. This is what happens when you get involved in protectionist policies using tariffs. This trade war has very little to do with trade. This is a superpower of the United States trying to stunt the growth of China's influence in this world. Period. End of story. Has nothing to do with soybeans. Has nothing to do with wheat. This is a joke. It's a facade. And now it's just a convenient excuse for why the global economy is slowing down. All this is doing is adding to the pile of things that is causing this global economy to slow down. This is not a solution. It's adding to the problems. Now, a couple other things that I thought were interesting, a couple articles that I read today. One of them was centered around the Bank of America, Merrill Lynch, talking about something that we've been talking about here for quite a while. And that is sort of the decoupling of markets. And in this regard, they are pretty much predicting what we have been saying here for quite a while. Do not be surprised if the U.S. dollar increases in value, which it is doing today. Again, one day is not a trend, but it is doing this today against a basket of currencies. And gold, the price of gold will also rally because we have central banks the world over engaged in cutting interest rates, a new easing cycle, and many of them will embark on quantitative easing or some such policy measure. So typically, if you have a stronger dollar, you're going to have weaker gold. If you have a weaker dollar, you'll have stronger gold. But we have told you here repeatedly, look out for things that could decouple, that they'll delink, that if you have a positive relationship, it might turn negative, or if you have an inverse relationship, it might turn positive. And this was one of the things we highlighted. You might see a stronger dollar and stronger gold at the same time. I am sticking with that. And now you have Bank of America Merrill Lynch thinking the same thing. Because another thing that they highlighted was they were looking at the FX markets, which is the currency markets, foreign exchange. And they were saying there hasn't been that much movement in the foreign exchange markets, despite the fact that all of these central banks are engaging in this quote-unquote currency war or something of the like. Well, the reason is because they're all doing it this time. A decade ago, this was it's still an experiment, but it was the first go. It was the Federal Reserve and the ECB coordinating, which we highlighted in our video, Are Central Banks Trapped? Again, check that out on thecapitalnews.com. This was the experiment, quantitative easing. Zero interest rate policy, negative interest rate policy. They were the first out of the gate. Give it a shot. Everybody wasn't in the depths of the recession. You had China that was stimulating like mad, carrying the rest of the world on its back, allowing Australia and New Zealand and many Asian countries and other emerging markets to sort of get out of the recession or to stay out of the recession altogether. That's not the case anymore. There's no hero now. Not that China was the hero, because they did this all on the back of debt and manipulation too, which is why they will suffer stagnation and most likely a hard landing in the not too distant future as well. Okay? So they're saying you look at the Forex markets, everybody's doing the same thing, so it doesn't have the same effect as it did a decade ago. It was a shock. What's the Federal Reserve doing? What's the ECB doing? Well, let's watch and let's see. And by that time, okay, the movements already took place in various markets. Now, everybody's doing it. So, and everything's always relative. So there's no big move here in the currency markets, or at least they're all going to move in the same direction together. So if they all go down, they're all going to go down together. The dollar very well may go down, but it's going to go down with the euro. It's going to go down with the Chinese yuan. It's going to go down with the Australian dollar, the Canadian dollar, the pound, which the pound has been getting decimated recently. I meant to talk about this the other day. Simply decimated. It was trading at 128 not too long ago. Now it's down 121, which is a huge move in the currency market, by the way. Huge move. In a very short period of time. This is on the back of higher expectations and higher probability that there is going to be a no-deal Brexit. So it's just going to be a hard Brexit. Nobody knows what's going to happen. And again, Halloween, October 31st is the deadline for Brexit. And the Brits better leave. Now, briefly, for what's taking place here in the United States, we had Democrats debate round number 2. I actually did not catch it this evening. I'm going to take the time probably tomorrow to catch up on at least some of the highlights, if not watch the whole thing. I did catch a couple of the highlights this evening, and when I saw the highlight that I saw, I was amused, and I was a little disappointed because I meant to actually say this yesterday. And of course, it's easy for me to say this now after the fact, but I hope you believe me because it is true. Because sometimes, when you're talking and you're doing this podcast, something comes to your mind, you wish you said something different or you wanted to add to the conversation. One of the points that I wanted to add to the conversation yesterday evening was in regards to this round 2 of the Democrat debate in Detroit, was look out for Congresswoman Tulsi Gabbard to go after Senator Kamala Harris. And she did. She did. She went after her prosecutorial record. And there may have been other things. Again, I only caught a highlight, so I don't know how in-depth it got. But Tulsi Gabbard, to me, is going to be formidable. I also still think that Kamala Harris is going to be a formidable candidate. Tulsi Gabbard should get more airtime. I agree with a lot of what she says from the standpoint of foreign policy. I think she knows what she believes. She believes it sincerely. I don't agree with her on her economic policies, really, at all. So that's a shame because I think she's an articulate woman. I think she has a lot of her ducks in a row when it comes to foreign policy and understanding from the perspective of the military, and our foreign policy needs to be radically restructured. I mean, this is a structural issue that is bankrupting this country. It needs to be addressed. She, I think, has some reasonable solutions. Again, her economic policies couldn't be more terrible. I mean, she's up there with Bernie Sanders, Elizabeth Warren, and everybody else. And that's a true shame because she gets one part of the equation right, and it's an extremely important equation. And in fact, as the President of the United States, you have more authority on the foreign side of things than you do the domestic because you got to really contend with Congress on a lot of things, and rightly so. You should have to deal with Congress. They represent the people, and this is we the people. So I'm not downplaying that at all. I'm just telling you how it is. But Tulsi Gabbard, in my opinion, will remain a formidable person, especially if she can get a little bit more airtime. I don't think she has the polling numbers at this juncture to enter the debates, the next debates, which are scheduled, I believe, in September. But September, we still got a while to go. So anything could happen between now and then. But I think a lot of her ideas need to be heard from the foreign policy standpoint because nobody else on either side is talking about it like that. They're just not, and that needs to be a real discussion. We're spending over $700 billion a year on defense. For what? I mean, the next several countries combined, we outspend on defense. And a lot of those countries are our allies. So what are we doing? What are we preparing to fight? Who are we preparing to kill? This makes no sense to me whatsoever. But I'll do a deeper analysis on this. But nevertheless, it's the same stuff. It's the same talking points. The Democrats with their economic policies, terrible. They are not progressive. They are regressive. No doubt about it. And nobody wants to talk about the Federal Reserve because nobody knows what they're talking about when they talk about the Federal Reserve. Well, you know what? Listen to the Capital News and you understand a hell of a lot better. Thank you so much for joining me today, ladies and gentlemen. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. This is the Capital News. I am Alex Karitis. Godspeed.